Well, now that the House has passed its tax reform plan and the Senate Finance Committee has sent its plan to the floor, it's time to compare and contrast the two versions. Joining us now is Professor of Agricultural Law and Taxation at the Washburn University School of Law, Roger McEowen. Thanks for joining us, Roger. You're really coming in very handy for us right about now because we know that you have looked at all the information on both sides. And we've got to ask you, what impact will the House and Senate tax bills have on ordinary income tax brackets and rates?
Well, there's a difference between the House and the Senate bill. On some things they're the same, but some things throughout the bill they're different. But when you look at the income tax brackets and rates, the House has 4 brackets, then with a tack on for those with over $1 million of AGI, and the Senate has 7 brackets. Now the Senate starts lower; they start at 10% compared to the House starting at 12%. And the Senate ends up at 38.5, and the House ends up at 39.6. But really, when those rates are also indexed for inflation, based on, but when you look at where the brackets begin and end, I think many people with modest to high incomes, particularly under the Senate bill, will see a significant rate increase, at least as compared to the House bill. So when we compare them on brackets and rates, I think most people would find the House bill preferential to the Senate bill.
Okay, how about when it comes to standard deductions?
Well, both the House bill and the Senate bill essentially double the existing level of the standard deduction. So they set it at $24,000. It's about half that right now for a married couple filing jointly. So both of them are the same on that point.
Okay, what do you think we can expect to see as a result of the elimination of personal exemption and itemized deductions? This is something that a lot of people use.
Well, that's really the price for doubling of the standard deduction, at least in part. It's the elimination of the personal exemption for a taxpayer. The House has brought back in kind of an enhanced child tax credit, and they've added in a credit for non-child dependents, and they've brought in a family flexibility credit to kind of offset the loss of the personal exemption. The Senate also, as I said, eliminates the personal exemption and does boost that child tax credit and increases the phase-out range. Plus, the House bill and the Senate bill eliminate a lot of major deductions. Now, the House eliminates pretty much all the major deductions except for up to $10,000 worth of property taxes. The Senate bill also eliminates the major deductions except for medical expenses and charitable contributions, which are also saved in the House bill, by the way. They stay, but the Senate eliminates less deductions than does the House bill overall.
Okay, before we wrap, can you speak to transfer taxes and the corporate tax?
Yeah, the transfer tax, again, you've got a difference between the House bill and the Senate bill. The House bill sets the applicable exclusion from estate and gift and generation skipping transfer tax at $11.2 million for next year, so doubling it. It eliminates the estate tax and the generation skipping tax after 2023, but retains stepped-up basis, and that's a big deal for ag people. A lot more people are impacted by income tax basis than they are by the actual estate tax. Now, the Senate does not repeal the estate tax or the generation skipping transfer tax. It does double the applicable exclusion, and that'll take it again to $11.2 million for 2018.
Excellent. Well, we really appreciate you sorting everything out for us. Roger McEowen with the Washburn University School of Law, thank you so much for joining us, and we look forward to speaking with you soon.